Hey guys, Jordan from Precondo here. Today I wanted to dive into the federal 2022 budget, in particular the housing policies and the implications on the housing market. Obviously, this is a budget aimed at making housing more accessible or affordable. So we're going to go through some of what I think are the key points after reading through it, and we're going to summarize what's important, what's to know in this budget. And only going to stick to housing stuff here. So first thing we want to talk about is the first-time home buyers tax incentives. In particular, the introduction of a tax-free first home savings account, which will combine the tax sheltering benefits of an RRSP and a TFSA. Savers under the age of 40 will be able to save up to $40,000 tax-free. Now, obviously, this is more of an accessibility thing, makes it easier for first-time home buyers to get into the market, and I'm all for that. I think this helps. I mean, it's only $40,000. It doesn't go that far of a way in areas like Toronto or Vancouver, but I do think it is sort of we'll call it a weak demand stimulant, if anything. So it's not going to make housing more affordable, but it will make it easier for first-time buyers to get into the market. And of course, I have no problems with that. I love that. Curbing foreign investment and speculation. This is one of probably the most reported on parts of the budget. And it's basically a 2-year ban on foreign buyers. So this would prohibit foreign commercial enterprises and people who are non-Canadian citizens or PRs from acquiring non-recreational residential real estate in Canada for a period of 2 years. Refugees and people who have been authorized to come under emergency travel would be exempt as well. International students on the path to PR would also be exempt in certain circumstances, as would individuals on work permits who are residing in Canada. So this one's interesting to me. It's very difficult to get clear numbers on how much foreign homeownership there is in Canada. Years ago, there was a report showing 6 or 7% in Vancouver and 3 to 4% in Toronto of the broader market. And of course, when you look at newer condos and pre-construction condos, the assumption is, or at least the industry assumption is, that there is more foreign homeowners in that category in sort of newer condo supply and in pre-construction condo supply. Obviously, a number of years ago, we implemented the NRST, so a 15% non-resident speculation tax for any foreign buyers in Ontario. And I think that curbed demand a little bit. But to be honest, they're not that big of a chunk of the market. I would say in pre-construction, they're certainly not more than 10%, probably closer to 2 to 5%. And I called 2 developers for this video, 2 of my developer friends, to talk about some recent sites that they sold in 2 different areas to give you guys an idea of what it looks like on your average project. So first, I called a developer friend who launched a project in the 416, so in Toronto proper. This development launched 2016, 2017, because I wanted something from some time ago, and it's about 800 units, multi-phase project. Of those 800 units, 12 were purchased by foreign homeowners, so obviously not enough to really move the needle in the market. I also called a developer who recently launched something this year in the 905s, just under 400 unit building. It sold out very, very quickly. Of the 400 purchasers, and this launched a number of weeks ago, so this launched before the federal budget. Of the roughly 400 units, 3 were foreign buyers. So again, not enough to move the needle. And I don't think that banning foreign buyers is going to have as big an impact as a lot of people think it will. So we don't really have a whole ton of direct foreign investment into single residential, family units. What we do have is a lot of recently foreign capital coming into Canada, and this doesn't touch that, right? So obviously, if you're a wealthy foreigner buying through your children who are students here on the path to getting PR, or if you live in another country but you have a Canadian passport, this doesn't apply to you. You can still purchase real estate, and realistically, that is how foreign capital has been flowing into the Canadian market for the most part, at least from what I've seen. And I'll tell you, Precondo.ca, we're the 3rd largest pre-construction website in Canada by organic traffic. We rank all around the world for Toronto and Montreal related search queries for pre-construction condos. We very rarely deal with foreign buyers. I think last year I dealt with 2. The majority of the calls I get from Hong Kong or China or the Middle East, these are people who have passports or their children do, and so they're not classified as foreign buyers. Next up, we have making property flippers pay their fair share. So any person who sells a property they have held for less than 12 months would be considered to be flipping properties and would be subject to full taxation on their profits as business income rather than capital gains. So effectively doubles your tax implications on a flip, which is absolutely huge, right? Canadians who sell their home due to certain life circumstances, death, disability, birth of child, new job, or divorce would of course be exempt. So this one's interesting to me. Obviously you have a lot of rehab properties in Toronto. You have a lot of older properties people buy, they fix, they sell at a profit. That strategy obviously works a lot better in a rising market rather than a slowing market like we're seeing currently. I mean, who knows if that trend will sustain for the rest of the year. I think it will if rate hikes continue, but regardless, it's a strategy that's worked really well the past couple of years. What I think is interesting is realistically, it does take time to rehab a property. So somebody who's doing an actual renovation job, rather than holding the property for 8 to 10 months, they're just going to hold it for 12 plus months. So this isn't really going to change that. It's just going to change the turnaround time on a sale. It'll increase the interest cost. It'll mean that they have to have a little bit more margin on those projects to make it pencil. And then as far as speculators, like people who are just buying homes and selling them 12 months later, I think that really only works in a market where you're seeing 30-40% price appreciation in a handful of years, like we've seen over COVID. That's not something we're probably going to see in the future because it's simply not a sustainable market. It's not realistic. So to me, I mean, it doesn't really do much. I can't really say it's good or bad. It doesn't really change the picture for the market in any way, shape, or form, in my view. Next up, we have taxing assignment sales. Make all assignments of newly constructed or substantially renovated residential housing taxable for GST purposes, effective May 7th, 2022. This one is interesting to me. So if you're not aware, an assignment sale is when you buy a new pre-construction property, we'll call it a condo because that's what I'm most familiar with, and you sell it before it's ready. So you sell the paper contract that would eventually turn into a title and transfer of property when the property is complete at a profit, generally speaking, right? It's something a lot of people have done over the years and made really good money. What a lot of people don't realize is you're already taxed if it's your first assignment sale. So if this is your first time flipping a condo contract, you get taxed in a more favorable way. You pay capital gains and of course any legal fees, realtor commissions. But if it's your second assignment onwards, you already get taxed HST, right? So you already get taxed in this way if it's your second, third, fourth assignment, or if the government if the CRA determines that property was going to be an investment property. All this is doing is making that HST applicable to all assignment sales. So I'll walk you through an example here. Here's a case study assignment sale from one of my clients. This is a property we purchased for $650,000, held it for 30 months, and then we sold it for $823,000. So you can see there, after real estate fees, assignment fees, and legal fees, he on paper was walking away with $149,000 in profit. Now, if it was his first assignment, now this wasn't my client's first assignment, but if it was his first assignment, he would take that $149,000 in profit and he would apply capital gains to it. So obviously capital gains applies to 50% of the profit, and then you're taxed at your marginal rate. So let's assume you're making the big bucks and you're taxed at 50%. That's $37,250 in tax. You walk away with $111,000. Pretty good, right? Well, in the worst case scenario, or really the second assignment onwards case scenario, you would pay income tax plus HST, and you would pay HST on deposits and HST on profits. So this is what the government is now making applicable to all assignment sales. In the case of that, you're going to pay deposit HST, which in this case would be almost $17,000, and profit HST, which would be over $19,000. So you're looking at a difference in transaction cost under the new rules of $36,000. So that's $36,000 less you're walking away with if this was your first assignment, right? Obviously, assignment profitability is determined based on not just tax policy and implications, but how good the market's doing. So if you buy a pre-construction condo for 20% more than the resale market and you're selling it in 5 years, the resale market has to do some considerable lifting in the meantime for that property to be in significant profit to justify selling on assignment. Now we're adding more tax to that, so it's going to make it even less profitable to do assignments. Now I'll link in the description my video in depth where I go over why I think you shouldn't really buy pre-construction with the intent to assign. You should more look at assignment as a way out if life changes, but always buy property that you intend to close on because you really never know what the market's going to do in the interim. And obviously the tax implications, transaction costs on real estate in Toronto are so high that it just makes sense to hold real estate for a longer period of time. But regardless, I would say, 5 to 15% of the market, depending on where the project is located and the type of project. I would say 5 to 15% of people who purchase pre-construction are looking to assign before closing. It's more in the 905s in cheaper areas like Brampton and Mississauga and Vaughan, and I tend to see less of that type of strategy play out in Toronto, where you're already paying 15, 16, 1700 a square foot for your average condo. But regardless, there is a chunk of the market that intends to assign before closing. The question is, will this reduce pre-construction demand? I think it will, under the assumption that consumers are even aware of this. Because it is worth noting, I get calls every week from people who bought pre-construction years ago with a different agent, not with me. And, maybe their realtor's not in business anymore, or maybe they don't handle assignments, or they're not picking up the phone. Whatever the case is, they call me for help with the assignment. When I explain these tax implications to them, capital gains versus HST and income tax, in 9 out of 10 cases, the person on the other end of the line had no idea. Their realtor didn't tell them at time of acquisition. Their lawyer didn't tell them if they even had a lawyer review it during the 10-day cooling period. And of course, the builder doesn't disclose this. It's not their job to. So my question is, will consumers even be aware of this? If yes, I think it'll reduce pre-construction demand a little bit. I think a lot of people will just shift their strategy, because when people call me and they ask, hey, I want to buy a condo to assign it, and I explain these implications to them, a lot of the time they say, okay, well, maybe I'll just buy it and rent it out for a number of years before selling it, or reevaluate the decision then, maybe refinance it, whatever the case is. So again, I don't see this as cratering the pre-construction market by any means, but it's certainly going to take a little bit of demand out of the market, which I think is actually a good thing, because you don't want to have this sort of systemic risk where 10 or 20% of the market are buying these pre-construction condos with the sole intent to assign for a quick $100,000, $200,000 in profit. A better, healthier market if people just intend to close on the properties that they buy and only assign in the case that life changes. And finally, we have the home buyer bill of rights. So the home buyer's bill of rights could also include ensuring a legal right to home inspection, which I think is a good thing, and ensuring transparency on the history of sales prices on title searches. This is good. I think, sales, I don't think you should have to sign up for House Sigma or condos.ca to see sales history. I think prices should just be open and available to the public. I think people should be allowed to share them on social media. I think realtors should be allowed to share them on social media without blurring out addresses. I think more transparency to the real estate market is a net positive for everyone involved, including realtors. I know a lot of realtors fight me on that. They wanted to keep the sold data private, but let's be real. If your only value to a client is the fact that you hold the sold data, you're not a very good realtor at all. So I think more transparency is a net benefit to everyone. Next up, we have the ban on blind bidding. Now, this is obviously a provincial thing, right? Not federal. So provincial will have to play ball with this. I don't know how I necessarily feel about it. I will tell you this. I have seen rare instances. I've seen situations where, you have a bidding war, there's 10 offers, and the winning offer is $50K above the second best offer. That's obviously no good, because they've kind of overpaid versus what the market's willing to pay for that property. However, the 9 out of 10 bidding wars that I've been a part of, either on the listing or the buying side, I will say that generally speaking, the top 2 or 3 offers are within $5,000 or $10,000 from each other. So they're typically very close. I guess the question is with open bidding, will people be more conservative with their bids, or will they have sort of social proof that other people are willing to pay this for the property and be willing to pay even more? It'll be interesting to see how that plays out, but if you have any thoughts on blind bidding, leave it in the comments below. Interested to hear your takes as a buyer. Now, one thing I want to talk about, because I just spoke about provincial versus federal, federal authority. Municipally, so obviously federal government is very focused, or they at least tell us they're very focused on making housing more affordable for everyone. That is a great and noble cause. Of course, they don't want to say that they're going to cause prices to correct, because that's no good for votes either. So they have to kind of walk a fine line, right? They have to make it look like they're doing something, but also not put the market in a precarious position, especially when you consider that real estate and related real estate industries are over 25% of Canada's GDP. What's interesting to me is at the same time as this happening, you have Toronto increasing the development charges on the municipal level. So currently, the average current charge for a large apartment that the government charges to a developer, which obviously that cost is then passed along to you in the form of the purchase price, is $55,000. It is now proposed that that development charge will go up 49%. So it'll go up to $81,852. So you're talking about a $25,000-$30,000 price increase in development charges that will ultimately just be passed along to the end consumer of a pre-construction condo. This doesn't include inclusionary zoning, which I have a video on, or it also doesn't include the fact that construction costs themselves have risen very rapidly in the past couple of years. And I'll leave a link to the in the description about that. So what I'm seeing is not only is the labor and supply market making it more expensive to bring new housing stock to the market, but also the municipalities are. So the municipalities are increasing development charges, making it less affordable for you and I to buy pre-construction condos. So, the federal government is trying to make it more affordable for housing, and at the same time, the municipal government is making it less affordable to buy a new home, which I find is really interesting. I will probably do a separate video on this later this week, and on, general cost of construction in Toronto for condos, because it just keeps going up. But if you guys like this type of content, leave a like, subscribe, and I will see you guys next week.